Alright everyone, thanks for coming back to the first video in the intermediary series. Right now we're going to be going over bars versus candles. Then we're going to dive into candlestick anatomy and go straight into candlestick patterns. And let's get into it. Alright guys, so this is bars versus candles, really straightforward. Right now we're looking at a chart of bars, and I'm going to pull up a picture in this video later on and show you what a bar chart looks like and why we use candles. So right now, this is the anatomy of the bars. Real quick, we have the high and the low, and that shows you the lowest point and the highest point price action moved in that time period. Each bar represents one time period. So for example, you can go from a 1-minute chart to a 5-minute chart to 15-minute chart to a day chart to a monthly chart and everything in between. And what that means is one of these bars or one of these candles later on you'll see signifies that time period. So if it's a monthly chart, one candle is going to equate to 1 month. If it's a minute chart, then one candle is going to equate to 1 minute. And the open, close, high, low is going to be a representation of price action in that time frame. So for this example, let's just say it's 5 minutes. Let's look at the candle, the bar on the left. So it opened to the left side, and we can tell that because obviously the indentation on the left shows that that's where it opens. And since it opened higher than its close, that means that this is a bearish candle. However, you can see that the price action decided to go higher than its opening to the highest point, and then it went all the way down to the low but closed above that lowest point. There's tons of data. There's 4 data points inside each candle, and then when you put multiple candles together, it tells a good story. So candles and bars, they're pretty much the foundation of learning how to read charts and do technical analysis. They're the foundation of it. So just as letters build up words and words build up stories, candles and bars are the same thing. They're the foundation. They're going to be building up the story for you. So to the right, we can see that since it opened below the close, that this is a bullish candle. And the difference between a bear and bull, if you don't know, a bear market is associated with a downward trend, and then a bull market is associated with an upward trend. Just like the bearish candle, the red one, we see that price dips down below its opening, going all the way up to its highest point and closing below that high. So that's just a candle, and then I'll put up a picture real quick to show you what a bar chart looks like as well. But this is the candlestick anatomy, and it's very similar to the bar. As you can see, the only actual difference is the body. I mean, they're identical essentially. So the reason why we use candles, they tell you the same amount of information, but it's a lot easier for us to read when we're looking at a chart. So the only difference is the open and the close, the body is wider, and you can see that it's full. So it's just easier for us to read. Other than that, it has the same anatomy as a bar. So we can look through that, and the only real difference is
Today, Junior,
the terms associated with the bar, the candles itself. So we have the upper shadow, which I call the wick, and then we have the lower shadow, which I call the shadow, but it's also known as the tail. And then we have the real body. The real body is fuller, it's wider, and it's easier for us to read. Alright, so now we can go into basic candlestick patterns. Long shadows are significant when learning how to read candles. Like I said, candles and charts are just telling a story. It's just whether or not do you know how to read them. And learning how to read candles is a great way to learn how to read the charts. So what do long shadows represent? So let's look at the candle to the left. Let's just say we were coming down in a downward trend, right? Well, buyers pull the price all the way up to the highest point, correct? But the sellers drive price back down and it closes still below its opening. But that's a good indicator that buyers are getting ready and sellers are losing a lot of their potential. So the bears are losing a lot of their kinetic energy, and the bulls are ready to come in. Similarly, we have the candle to the right, we have a bull market coming, and bears start trying to get a little bit in because they might be testing a resistance zone, and they bring price all the way down to its lowest point. However, the bulls manage to bring it back up and close above its open. But what does that tell us? It tells us that the bears are getting ready to actually open a position. They're getting ready to transition and take over the market, and there's a lot of selling sentiment associated with this candle. So those are just things to keep in mind about shadows. They tell a big story, and then where the body closes tells a big story as well. So we're going to go into exactly what that means and how we can not only find these patterns but associate them with possible points of entry for trading. Another popular one is going to be a spinning top.
Another one.
And if a spinning top forms during the downtrend, it usually means there aren't many sellers left, and there's a possible reversal in that direction. Alternatively, we have a spinning bull candle, which means it forms at the top of an uptrend, and it just means that buyers aren't left, and a possible reversal could happen in the other direction. Now, these candles are represented as bulls and bears. However, the color of the candle doesn't necessarily matter too much for this particular scenario. And then lastly, we have doji candles. Two more. We have doji candles. Doji candles are extremely significant because they suggest indecision or struggle in the market and between buyers and sellers to the left and to the right. So we got the long-legged doji, we got the dragonfly doji, got the gravestone doji, and then the four-price doji. The four-price doji is kind of like superior to all of them. What you're going to see more is like a short-legged or a long-legged doji. Very rarely will you see like a gravestone or a dragonfly doji. But all of them represent the same thing. They all suggest indecision in the market and a struggle between buyers and sellers. So typically a good indicator for potential reversals on price action. And then lastly, Marabuzo. And I'm not sure if I'm pronouncing that properly. However, these candles are very significant when determining potential price direction or continuations. So the black Marabuzo is an extremely bearish candle, and actually flipped it around, it should be the black or the red one should be where the white Marabuzo is at, or the green one, and the green candle should be where the red one is at. So excuse me, sorry about that. So let's just go back and think about what this candle is representing. So if there's no high or low, that kind of tells us that the bears came in at the opening price and drove price down all the way down to its lowest point. So its highest point is typically its opening or close to opening, and its close is all the way at its lowest. So that tells us the bulls didn't even have an effect in this particular candle. Similarly, with the white Marabuzo, this is a very bullish candle. The candle opened and sellers weren't allowed to drive price down below its opening price point, and then also drove price all the way past where it ended at its high. So these candles are extremely important, and they're significant as far as determining continuation and direction or potential reversals. So the black Marabuzo, obviously a bearish continuation and a bearish reversal. The white one is obviously going to be a bullish continuation or bullish reversal. And that's it. These are the main things to consider as far as learning about candlesticks. It's very straightforward. Just learn the candlestick anatomy. I might have this slide in the Medium post as well, just so you can kind of look back at it as a reference. But these are just things to consider. Candlesticks are telling you a story, and these basic patterns are really important for learning price reversals or continuations. So just keep these in mind, and they're telling a story. Price action tells you a story about buyers and sellers. So those are things to keep in mind. The next video we're going to do is probably going to be a sub-medium post for this medium post itself, and it's going to be going over candlestick patterns for singles, doubles, and triple candles. So thanks again, guys. After this, we're actually going to go into structure and resistance, and then we're actually going to go into the charts themselves and look at Bitcoin and try to find some of this structure and resistance, these trend lines, and also some potential candlestick patterns. Thanks again. Talk to you guys soon.